Hey everybody, hey traders, happy Friday, and welcome to the final hour session. It is January 31st, 3 p.m. I am joined by a new trading partner today. He just gets to hang out. Looks a little bit different than Benji. He might be a little bit noisier, but anyway, little cardboard hanging out as we start off today's session. Here is what is going on. We had a high on the day, so gap up, little slow melt up, back up towards all-time highs, but not quite there. And we did have a nice little fail. So we had some tariff talk yesterday during the end of the day. We had some tariff talk today to end the month. Yesterday, the market fought right back. I said that we were probably going to go after a 610 or a 600 level, and turns out we might end up hitting both. So let's have a look at the SPY. But have two trades in. I threw in some bear call spreads as volatility was spiking up just in the last maybe hour or so. So I have a trade in a 25 cent, 45 cent bear call, and then I put in a broken wing butterfly at the 6,000 handle as well. So this is all within the final 56 minutes. I did get a chance to post it. Actually, might be trading for a bit more. If anybody's interested in this broken wing butterfly for my daily profit play, it's trading for about 20 to 25 cents, even 30 cents now, 35 cents. Again, we're looking at about, a 91% chance of profit, 90% chance of profit. Things could go, pretty nasty here to close up the month. But we'd have to hit all the way down towards 6,000. I think that's my strike on the pin. So I will take a quick peek at that one. So let me just look at positions really quickly. I have my butterfly right here. I got filled for 20 cents, and in the final 56 minutes, is it possible I can get this thing closer to my pin price? So if price were to fall towards the 6,005 or 6,000 level, I can turn a credit into a little bonus trap. And then on the bear call side, I've got the 6010 by 6025 and the 6120 by 6150. So I have 3 trades running towards the end of the day. Obviously pretty active, but price is taking out yesterday's little tariff talk lows. We're getting some spikes. We've got some bigger market levels here. There's the 59.90 that's starting to light up. If this market, drops all the way down to 59.90, that'd be pretty wild. Hopefully it will stay right around the 6,000 handle, but I'm going to keep a close eye on this. So this will be a pretty active and exciting, I guess. 55 minutes for the final hour. So if you're out there, type in where yes, happy Friday. Everything's coming through loud and clear, and the markets are dropping. So we just have some added volatility. We're getting some big drops towards the end of the month. Let's go back into, 6,000, watching that level closely, 59.90, looking for a potential bounce, expecting some volatility. We are just shy of the all-time highs in the SPX, and we were just shy of the all-time highs on the SPY. Today's active management certainly served its purpose. I grabbed a bull call spread, paid about 40 cents, closed out for $1, which was not a bad trade. I ended up taking a small loss on the 591. I mean, unless things go just absolutely bananas and somehow turn that into a winner, but I highly doubt that. So anyway, but bear call spreads are in, so I'll keep a close eye on this one. Move this down. So I'm going to change this alert to 61. Let's go SPX here. So 61, 6110 is my bear call spread, and 6,000 is my broken wing put fly. So that's a skip strike put fly. Oops, and I'm out of alerts. Classic. Jeez, you'd think I wouldn't add like 10, 15, 20 alerts a day, but apparently I do. Anyway, let's see if we can hold between 6,000 and, well, basically between 6,000 and 6,100. So if I take a look mechanically right now, the 6,000 strike is around a 10 delta. So I still have probability on my side, but we'll see what happens. I've got a trap there for 500 bucks. And then the bear call side is actually looking pretty good for 25 and 45 cent winner to end the day. So it's mostly look to see if I can keep it in between. See if I have another alert. I don't. No big deal. Okay, that is fine. That is fine. All right. So how are we wrapping up the end of the month? Well, let's take a look here at the monthly candle. If we go to SPX, today's market turned pretty sour. So we got a pretty big red candle right at the all-time highs again. This is why we should be ready to buckle up a little bit, right? Take a look at the monthly candle. Oh, that's the weekly. Let's go to the monthly candle. And we're leaving a long wick to the north. It's not quite all bad, but this is almost like an equal wick high and equal wick low. So January is just a monster indecision candle with, still green, still clinging to some green. You take them? Okay. All right. See you, dude. See you, dude. All right. He's gonna let me trade. All right. So let's see what we have here. We're at 60.36 right now. Watching. Levels are starting to light up a little bit. I don't know. I think we can hang in here. I mean, there's a lot of kind of intraday support, unless this thing is just full on dump city. There's a lot of support in here, previous highs. So I could see, I don't know. I could see 6,000 holding in there. Current price is hanging in there. A little bit of chop around the 60-50 zone perhaps. But, intraday, the markets have been pretty active. I mean, that's 2 days in a row we've had some pretty interesting swings. So yesterday, SPX, we gap up around 41 points. We drop down about 52 points. We rally up 59 points. And then we drop again 45 points, all within the same day. That's Thursday's trading. That's pretty wild. We have a gap up, flush down, flush up, gap, or aggressive push down. Today, we had another gap up around 50 points, and we're clearly climbing to higher points here. Here's 85 points to the downside. ATR is around 70, so we are exceeding the daily trading range right now. Obviously, in a bit of a sell-off mode, the market may sell off a little bit more aggressively, but my daily points on SPX is 71.76. We've already exceeded that. Obviously, we can go higher and faster and farther, but I'm going to see if, right around that kind of 70 to 80 point move, this is about as far as we go today, and we'll see where price goes. But I'm looking for a chart alarm, watching here. I hope we just kind of pin around this 60-50 zone, and that would give me a nice little win on the bear call spread times 2, and a nice little quick win on the 6,000 broken wing butterfly with 1. So that'd be 3 little day trades at the end of the day for winners, which is not typical, but noticing the sell-off, I looked at the intraday highs, and even when price was trading here at the gap fill, I was still getting on the option chain. I saw like 30, 40, 50 cents on the sell side of the put or the call. So I took a stab at it, and I went a little bit wider, but played the probabilities. So far, so good. Yep, I know, man, and I hear you. So the good thing is do you want this move? Yes, you do. So the iron condors we have for some of our longer-term daily profit plays are looking a lot better now, and that should help. So we are getting closer on the call side. It's not as threatened on the call side now. So a lot of these trades are coming back into positioning. So that's always a good thing. In fact, this one here, the 62.10, 62.15, 56 by 50, 55.95, right now we're getting close to a profit target. So, give it a little bit more time over the weekend. If we get another flush lower or even a, mediocre, I mean, nobody knows what's going to happen by Monday, right? If we have this tariff thing hit over the weekend, it says February 1st, which is tomorrow. If it hits over the weekend, it affects the markets. There's going to be some interesting openings on Monday. So perhaps, earnings takes a back seat. The Fed didn't really matter. PCE was a bit of a non-event today. This is all about tariffs, and this is what everyone signed up for, to have Donald Trump be president. Give me 1 second. Okay. Trump might make computers illegal. Who knows? Who knows? Tariff for Canada. What do you see? Yeah, that's a good question. Let's keep an eye on that one. I'm going to try to find some other alerts here. I want to try to free up one alert on my charts somewhere. I think I've got a bunch set. SPY alerts. Let me go to Qs. QQQ any alerts? No. Dow alerts? No. Russell alerts. I'm going to get rid of this Russell alert here. Just delete this one. So delete there. And then I'll set my SPX at 6,000. And I'll do the broke wing butterfly pin price. So if we did fall down there, the good thing is let me build this trade out really quickly. So I did a broken wing butterfly on SPX. Today's the expiration. So I sold the guts SPX. Oops, get out of this for a second. All right, new trading partner. Tag. Benji's it. He's in. They're like the road warriors here. Animal and Hawk. All right, let's build this one out. So I'm going to go option legs for the 31st, sell the guts. I did a 6,000 in the middle. So it should be 6,000 put, and then a 6,005 here. And I think I went 90 or 85. Let's see what that looks like. Double check my legs. I went on SPX 85. All right, let me switch this out. So 85. There we go. All right, so current price is right here. I've just got this built out. You can see the profit trap that I have, right? So if price is going to fall a little bit lower, my bear call side is all the way up here towards 6,100, which right now would have to have a monster move back up. So it looks like my two bear call spreads are going to finish in profit with a high probability. Now we're going to see if this is vulnerable to head back down towards 6,000. If it is, that's my pin price. So could I turn a 25-cent credit into a potential $500 profit trap? We're about to find out. I've got 45 minutes left in the trade. Okay, so things are getting interesting. But I want to keep this chart running because if we're going down to my profit trap, I want to pay attention. If we're coming back up to my 6,100, I want to pay attention. I've got risk up here, and I have risk way past the 6,000 handle. But right now we're sitting right in the middle. So, I mean, again, my gut tells me I'm pretty well positioned for three winners on the rest of the day, but you never know. So let's keep a close eye on that. I'm going to watch this real price on my other screen, and let's talk market. So question came in on CAD. I mean, a good way to look at the CAD in general is going to be just dollar CAD, right? So we had a ton of noise here for the last couple of days. We saw the BOC cut rates again, and we now have a tariff announcement for Mexico and Canada. I think you got to wait for the dust to settle. I don't think there's any real anticipatory measure to make. I think the trade that I was in was the cleanest trade on dollar CAD, taking it up to a nice measured move. If it gets worse, I mean, you're looking at a high that goes back, almost 9 years, right? So 2016 high and 2020 high. I mean, that resistance should be pretty important. So what I wouldn't be surprised to see is, again, and I don't know if this is the case, but if we start to see that price is going to retest that 2020 and 2016 high and then flush back down, I could see all this doing is running stop losses right here and just basically sweeping those liquidity levels, coming back in to give us a crown pattern of some sort, take a swing trade at this and see if this thing wants to sell off. Now, is that dollar getting weaker? Is that CAD getting stronger? I don't know why the CAD would necessarily get stronger because tariffs certainly wouldn't be favorable for Canada. But I just think it's a bunch of noise right now. And if there's one thing that you've learned if you traded anywhere from, 3 years to 5 years to 10 years, the market is filled with noise. Yesterday we had it in the last 15 minutes of trading. Today we have in the final couple of hours of trading. And this is why it's just trade size and risk management and continue to trade through whatever the market's throwing at you. So I don't really have a plan other than let's see what the CAD is going to give us. I think the best trade technically would be looking for a sell trade just because we have made a run from basically 32 up to 45 or 46. I mean, hitting up here towards like 4,600, that's a lot of movement with no real pullback, right? That's a lot of movement. So my point is, I was long here. I've taken profit. I think that this trade, if this is a low to high, I think this market can pull back to like a 382 or 50 pullback, right? We've got a lot of resistance back in here. That could be a nice equilibrium on this trade. But in order to get that trade, I want to see if there's a price pattern up here that I can follow and also define a risk. So I'm just going to stay out of it right now. Stay out of it right now. Let's see here. My buy in the Nas and S&P was going well. Well, it was until it wasn't, right? So were you not paying attention? Did you not have a profit target? What target did you need on Nas and S&P? If you're a short-term trader, I mean, I called out for the last 2 days 60-10 or 6,000, and right now 60-10 was right there. I mean, 60-10 is the chart alarm that did not activate today, but that high was 69, or I'm sorry, 609.96. That was the high in the day. So pretty close to hitting the liquidity level that I talked about. And then the other one was 600 and 595. Well, obviously after FOMC, which is all here, a bunch of noise on Wednesday. That was FOMC noise. And so I played it both ways. I was going after 610. I was going after 595. Ended up taking a loss down here with a 591 out of the money put. But I took a win right here that was much bigger. So net, if I put basically $100 in each trade, I lost $100 on this one, and I made about, what is that, 200, what was it? It was like 230 bucks on this trade. So net, lose 100, make 200. I mean, I walk away profitable and was able to trade at both sides with this week's volatility. So again, short-term trading, you shouldn't be surprised this market is not quite capable of getting to those highs yet, right? I mean, it's a lot of noise. Tariff talk is not what the market wants to hear right now. Ultimately, tariffs could be inflationary. Tariffs add a lot more friction to the global economy. I know that it's supposed to be advantageous to the U.S. and trade deals because the U.S. is getting taken advantage of and blah, 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 whatever. I get it. I get that it's supposed to help the U.S., right? But it's going to be like a grind on how it gets there. It's going to have to shake out a lot of stuff before it gets there. And that shakeout could be, friction in the global economy, a little bit of escalation in, even I wouldn't say geopolitical tensions. I would just say, trade concerns. I mean, we're talking about allies. We're basically throwing Mexico and Canada into the tariff talks, and then we're putting something on like 10% for fentanyl for China. And if we're continuing to look at sanctions elsewhere, but it's just disruptive, and the market doesn't really know what to do with it. So what's the market do when it doesn't know? Gets a little bit fearful, starts to sell off a little bit because it's somewhat preoccupied with pricing and risk. And on top of that, I just keep going back to all that is noise, right? All that is noise. And guess what happens? I still think that this S&P 500 is going to find the 200 moving average around 562. That is our current price. Based on this 200 moving average, I think this thing comes down to revisit holiday lows. I would not be surprised. Again, I've done this the last like 6 months. Do we hit, let's say, 630 before we hit 560? Right? And I don't know. I mean, I don't have the slightest clue, but I would say based on the bar count that I see right now and the amount of uncertainty and the sensitivity the market does have to negative news, that this is a very real possibility that if we can't hang to these highs and have more momentum, especially through December and January, that look, January performance is usually an indication of a yearly performance, but that could all change with the market giving back some of the gains today. So for the month itself, it's closing a little bit lighter. We're still positive on the month, but that was just because we had a huge drawdown earlier in January, right? Where we started out the year, we were sitting around 585, dipped down to like 575, ripped all the way up to fresh all-time highs, but S&P was the only index that hit all-time highs, right? Equal weighted S&P is pausing, S&P up here off the all-time highs retreating, NASDAQ retreating, equal weight NASDAQ retreating, Dow, I looked at selling a freaking bear call spread today. I just got garbage premium, so I didn't take the trade, but I wanted to short the Dow. And it was kind of a trade just like this, is just hitting some resistance and seeing if this comes back in and fills some gaps. Russell, same thing, a little bit of volatility on Russell. I might revisit the Russell trade if we get back to like 220 or 215. I might look at some 111 trades on the IWM. Okay. IWY pulling back a little bit. I think this is kind of range bound, but I'd love to see a test of this 200 moving average. IWX is top 200 value. We got a big spike in VIX right now, at least for the day. I mean, this was down earlier and now it's up. The VIX one day has gone from down like 5 or 6% to now up 21% on the day. So that is a big fat turnaround. SVXY, not enough. Okay, not enough. I'm going to actually set a chart alarm down here. See if we hit, let's go to like 46.15. Good enough to buy. So if we have a spike in the VIX, I typically like to take a position on SVXY to kind of buy that dip. Basically, this is a short volatility play. This is just a much less volatile way to do it. I don't like to trade the VIX itself or the VXX or VIX futures. Sometimes SVXY, SVIX is a little bit cleaner. Dollar index, a little bit stronger the last couple of days. Oil still pretty sideways, coming back down to that 200 moving average, but still pretty sideways. Is oil coming to 67? Is oil coming back to $80? I don't know, but I put on an iron condor to see what it wants to do in the middle. So if it stays below here and stays above here, I make money with this chop in the middle, and I'm hoping that's what we end up seeing. So USO, I took the trade on CL. So I just did a futures trade on oil. There it is right there in those yellow boxes. Natural gas, this thing has been just getting smoked the last couple of days. Really big drop since the 28th, so this week. Gold pokes the highs, and I told traders this week, like, just don't be suckered into buying gold at all-time highs. Again, we have a very high bar count here. Technically speaking, I could see gold retreating a little bit, coming back into 27, 25 or so, maybe even coming back deeper into the 2,500 zone. Gold is basically a safe haven bid right now, and we'll see what it does. But I'm not adding to my gold positions at all-time highs. I am holding positions, so if we go higher, that's fine, but I'm not adding more positions yet. If we come back and have any pullbacks here, here's gold futures. I would love a pullback on gold futures so I can start establishing more positions around this 2550 to 2450 zone. Here's silver, a little bit of a pullback today, chart alarm at 32.25. To me, that would be a good sign to start looking to add more. So if we get up here on silver, I'd like to see, this type of upside potential or a pullback to accumulate more, add in, add in, add in. I mean, I really do like silver technically a lot. So sudden drop, I mean, it's just noise, man. You got tariff talks that the market's taking and running with it. Here is my current trades again. I'm going to mark this up. I've got a profit trap on a broken wing butterfly, and I have a 6100, which is right here. So as long as price stays below this, I'm walking away with 70 cents a contract here. And as long as price stays above this, so greater than this line is another 25 cents. And in the profit trap is potentially $5. So again, right in between, it's fine. I think this trade is fine for the next 34 minutes, but I'm watching this pretty closely on my other screen. So as far as the sudden drop goes, it's just more tariff talk. It's also the end of the month. And I just think the market's going into the weekend a little bit more concerned. We have tariffs hitting on Saturday. What does this do to the futures market over the weekend? We're about to find out. There's no futures market trading on Saturday, but Sunday could be very active. And just like we saw this week from Sunday to Monday's open, if we have another big volatile movement in futures, just be ready for some wild stuff next week. Okay, Bitcoin was all the way up to 106, and now it's back down to 101. So a pretty decent retreat, and it just goes along with what I've been talking about. I mean, there's resistance, there's support. I'm not convinced these markets are making crazy breakouts. We're looking at some highs on Walmart. Sure. We're looking at some highs on Google. Okay, fine. We're looking at highs on Visa, MasterCard. Fine. But it's like a one-off move. That's not enough for me to be convinced that the entire market's going higher. If Bitcoin is struggling to be a range trade, I look to see if we pull back into like the 90K mark, if we pull back deeper, the 80K mark. But I just think we're going to have a lot of sideways movement. And I'm fine with that. I know how to trade that. I'm trying to position for that. If we go higher, I've got a tilted portfolio that benefits from a bull market, right? But I am playing a lot of defense, give myself a lot of margin for error, and taking a lot of income-based trades. I don't know. Good question. Scenario where gold drops to 25 and silver doesn't fall back. I don't know. I mean, I'd like silver to pull. I'd like silver to be bullish and be a better performer. If we get this move, XAU, XAG, right? I mean, this shows that gold is still kind of getting a bit of an edge on silver. But I would love to see this instrument. So this is comparing gold versus silver. I'd love to see this drop back down towards the middle and show that silver can go up. You know, gold might not do anything, right? Gold might just sit at the highs and then just melt higher, melt higher, melt higher. I might not get the pullback at all that I want. I'm sitting here staring at that 200 moving average. That might just, remember in the 200 moving average, it might just continue to go higher, right? It is it's a price derivative. So, I mean, if we're just going to go higher, 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 this moving average moves up. And so does this one. And so does this one. And so does this one. But at some point, if this pulls back into, let's say, resistance, and that just offers up dynamic support, well, that might be good enough to say, okay, there's my dip. But if I'm getting stretch away moves from the 200 moving average, I can't, in good conscience, just buy highs. So I don't. And I will try to look at some option trades if I like them, but I will be patient. Okay. Any news on the industrial? I told you it's all tariff stuff, man. If you want to look anytime you're asking why did this happen, you can look at any mainstream media. You're going to get mainstream media now. It's going to have Trump's face on it somewhere. Trump to impose tariffs on Canada, Mexico, China. Okay, go to financialjuice.com and get a bunch of real-time news, and you'll find something when it comes to the markets. You'll find a why. Does it really matter? No. Okay, but here's what's happening. Need to know market risk. Stocks are ending a wild week on a high note. Is it a high note? I'd say it's a sour note. Strong forecast for tech heavyweights alleviated concerns about industry that's propelled the bull market. Well, I'd say this is a little lagging because in the last, hour and a half, we've seen a pretty decent sell-off. So since about 1 o'clock today, this market wouldn't necessarily be on a high note. I mean, granted, the month is finished positive, and maybe that's just higher time frame stuff. Okay, but we have Reuters report on tariffs are false. Reiterates February 1st deadline for Canada and Mexico tariff. Let's see, we've got oil, dollar, S&P 500 weakening, dollar and oil strengthening, which I'm not really seeing oil move much. Dollar's getting a little bit stronger the last couple of days. Trump expected to issue tariffs against Canada and Mexico that will begin March 1st. And this reiterates the February 1st. So, okay. 1208 says March 1st, 13. Maybe this could have been the Y, right? This comes out at noon today, March 1st, and then at 1:19 says, nope, February 1st. So this weekend. Let's see when this market really turned today. There's a 1:15. Is it a coincidence right there that at 1:15 the market starts to drop and at 1:19 the press hits and says, nope, we're doing tariffs at 1:19 or tomorrow, February 1st? Again, it's just noise. And the only way you're exposed to this is if you're trading too big and you've got crazy price sensitive things. Let's see here. PC inflation numbers coming as expected, consumer spending higher than expected. And that is really all I have for like the major headlines. Right? So, I mean, if you're looking and scrambling, it's probably too late. You're either in this trade in the right way or you're not, and I don't know. So I'm just taking the opportunities that I had. We still have about 29 minutes. Watching this. Let's see what happens. So potential profit trap right in the middle. So right now there's no action needed. If this ends up pulling back, as long as I stay below 6,100, I'm good. I've said this like 5 times already. If we go down into a profit trap, I'm hoping that profit trap is no worse than a pullback to 6,000 on the SPX. So right now looking good. But going into next week and based on the Sunday to Monday futures market to Monday open, we could see that the market is kind of quickly pricing in or discounting any type of tariff noise. And maybe that's why the market is taking this aggressive sell-off today. Okay, fine. Well, if we have good earnings next week, does it stabilize things? I mean, earnings were relatively solid this week. It'd be really nice to get just kind of a list of like, okay, all the earnings, was it positive or negative? And let me see. I don't know if I have that. I'll say that would be something nice to see, like if it beat top and bottom. You can go like one by one, but that's obviously I'm not going to do that. So anyway, I'll keep an eye on this for right now. Futures market, there was that big smash right through that 115 candle. By the time we closed, so S&P down about, this is S&P futures. So you're down about 50 points in S&P futures, and you're looking at close to 300 points from that candle right there, from 815 down to 540. I mean, that's, what is that, 270 candles or 270 points? That's a big move on old futures. So yeah, a lot of steady, and this is exactly the bulls climb stairs, bears jump out of windows type day. Papa John, what's the trade? We're at my take profit can't get filled. What's the trade? What's the trade that you're looking for? What's the take profit you're looking for? Okay, let's see here. Spreads have lower return than your risk. For example, 300 to make 100. Yeah, it depends on the strategy. I mean, some strategies are that way where I'll make whatever, $100 to risk $300, $400, $500. Other trades, I'll set a 1-to-1 where if I risk 100, I make 100. So it just depends on the setup. There's a lot of strategies. Futures market. Yeah, if I zoom out in futures, I mean, we have, let me just look at this. I'm zooming out in the futures market right here, or I'll go to, yeah, this is fine. I look at the structure where we came back. I mean, that gap did get filled. We were just shy of the all-time highs. This is the potential scary thing right here, is we have this market that is right on the verge of breaking below. Take out this low, take out this low. I don't think we necessarily just collapse today, but that does set the tone where this market doesn't fix itself by end of today or by Sunday night futures. We could be looking at another healthy sell-off coming back into that first kind of reaction that we saw during FOMC. That was an FOMC? What the heck was that reaction there? What was this? What was this? The 20. Oh, that was Sunday night futures. Yeah. So Sunday night futures was really bad, and then the market spent all week fighting back. But if we are doing this where we have a high low, if this market's going to start breaking structure, is it possible that we have some type of like bear flag in here, and then the market is more open space to the downside? Yes, no, maybe. Okay. Take profit 345 on the 28th February expiration. You're looking at SPX. SPX trade. So I'm looking for, I've got XSP. Let me check. Let's see. So the trades that I rolled this week for daily profit play, I did set those take profits. I'm still going after my 15% take profit on those trades. I'll take a look at those for, I mean, if they're not closing automatically, then the broker is, over the weekend, it might help. If we open up kind of where we're closing today, that probably helps. A little bit more downside pressure certainly wouldn't hurt. But obviously, I want to keep an eye on everything. Okay. How often are you setting up swing trades before a Friday market close? Hardly ever. If I'm trading on Friday, it's usually a 0DT intraday trade. I'm not really doing anything for the weekends. I would rather start my trades with like a Sunday to Monday and give the market a chance to grind for the week, as opposed to a Friday to a Monday. I personally don't like the Friday to Monday. Mondays are usually calm, range-bound days. They typically see Mondays within stocks and indexes stay within the daily trading ranges. So I don't love those trades. But if you give the market the chance to go for an entire week, and I mean, there's obviously room for prices to move, right? But no, I don't love setting up trades on Friday going into the next week. I'd rather see, like Sunday night to Monday, if we gap lower again, then I'll probably establish positioning there, right? But look, there is a lot of space for this market. If I go, let's say 30-minute time frame here, there's a lot of space for this market to go back down. Obviously I'm not talking like, crazy corrections here, But I'm talking about realistically just coming back to revisit Sunday to Monday's open right there. We could have noise right there, right? We have a high, we have a low. This could be a nice midpoint that the market's just not quite sure what to do. Next week, who knows if Trump makes a lot of noise in the markets, but we know we've got earnings next week. We have like over 500 stocks reporting earnings. Earnings season is heating up. We got a couple more Mag 7s in, but this was a pretty big week. I'm not sure what happened on other stocks. Let me check. I've got a Tesla trade on. Tesla trade still, I mean, just so unbelievably tight. I was really disappointed that Tesla didn't move more than it did. Meta, I ended up taking that small profit, which I'm glad I did because this would have been full risk in the middle. Microsoft was a broken wing. This is fine. I'm taking that little 23, 24 cent winner up top. IBM, I had a pending order, but it was a broken wing to the downside, didn't get filled, so I can delete this one. Okay, ended up taking a small loss on Caterpillar. We were up towards that liquidity level, but because of the sell side and the earnings, earnings did not fill the gap, and that's what I was looking for. We had a liquidity level at 400 and a gap fill up at the 405, 410. Positive earnings would have been probably easy to the upside. Market didn't like the lack of revenues, and I read that their equipment sales were down. So market took it as a bad thing, but it was defined risk, and it ate up like $1.25. Nothing crazy. Let's see here. What else? Had a winner this week on XP. Had a winner this week on Chewy. I let the stock go finally around $38. My covered call, I just ended up getting rid of it at $37.50. It was pretty much trading at that level. What else? Chewy, Microsoft, Meta, XP, Qs, SPX, Silver. I had a nice trade on Silver futures for winter today or this week. That was like a 45-day trade. And then hopefully before we wrap up the day, still looking at 3 more winners on SPX to wrap up the week. So as long as we hang out, SPX, we've got 21 minutes left. And just to repeat this, I do have a profit trap to the downside. I think my 6,100 is safe. I want to keep a close eye on that broken wing butterfly. So this broken wing butterfly, which is right here, right now it's pretty much in full profit, but I'm looking to see if I get into the credit territory. So for 20 cents, does it get into a credit territory if price is going to drop a little bit more? So we're starting to shift down. There's 60.31. There's the expected move once again. If we come into 6,000 is my pin price. So if this market is anywhere interested into 600, I'm going to pin this thing for at least a few $100. So let's find out. So it is not done until close at 4 p.m. We still have 20 minutes left. All right, but for the week, overall, pretty happy on the week. Daily profit play, I'm 7 of 8. And after these 3 trades, if I wrap them up there, that would be 10 for 11 for the week on daily profit play. Waterfall income was 3 for 3 this week. We had 2 winners on the S&P and 1 winner on the NASDAQ. Double ups, I took a net winner on the SPY and a loser on the CAT. Took a winner on Silver, XP, Chewy, Microsoft, Meta, loser on Tesla with earnings. And then we have new trades for next week. So pretty active week, just another income week. Some of the iron condors starting to look a little bit better and getting closer to center. So all that's good. And I just need a little bit more time, right? A little bit more time. All right, so I'll keep watching that one on my other screen. Any charts you want to take a look at? Keep an eye on this one. I'll keep referencing. But I will say, like, a pretty crazy week, honestly. Fed was surprisingly dull. Trump and his comments and tariffs were surprisingly active. Noisy yesterday and then reaffirming today, and the market didn't like it as we were just off all-time highs. So we're still sitting at 1. I repeat, 1 all-time high for 2024 or 2025. 1 all-time high. And we were close, but last year we had 57. I think last year and 2023, look, 2023 was not all-time highs. 2023 was, here's the 2022 high, okay, and a 20+% correction. 2023 was spending the entire time getting back to break even. 2024 was what finally eclipsed the highs. So this would be, box this in here, okay? This is 2022. 2022. This was 2023. And this April pullback, August pullback, and then December. This is 2024. Right? So 2023 was a bull market, but it spent all that time just recovering from 2022's downturn. 2024 was a continuation of 2023's momentum, getting into the broader or the narrower concentrated. Mag 7 led the way. Very few stocks were super bullish. We had a lot of underperformers, and now the market is asking for a broadening out. Right now, the market's asking for, okay, we need the non-Mag 7 to perform well. Can they? Will they? I don't know. So 2025, I would imagine, is probably going to be something like this. Let me use a different color. Let's go, I don't know, green. 2025, right? I mean, we've had trend down, trend up, trend down from here. I mean, a lot of trends the last 6 years. Sideways and indecisive could make for a rocky 2025. But I, have the hard hat on and have the seatbelt on and looking to trade and trying to grind out some profits. But I don't think we have to just go straight up or straight down. That's what everyone thinks. That's what the emotions always feel like. But the market can also spend a lot of time going back and forth. And the last time we really had a sideways move is going to be, 2015, 2016. You don't have to do anything on that cat trade. You can let it expire. It's a debit spread. It's fully worthless. Let it expire. It'll close at zero. So the $1.25 or whatever debit closes at zero. It just settles over the weekend. Okay. All right. Eli Lilly. I have an income trade on this one. Earnings. We have earnings next week on Eli Lilly. Remember that earnings, by the way, are Q4 earnings printing in Q1. I would think that Eli Lilly had a pretty baller year in 2024 because it was just nonstop upside. It was one of the best performing stocks last year. We obviously had some hiccups around the August, September highs. This actually might be a good opportunity. I don't know. I hope we don't have a huge miss here. This trade was profitable already, so I had the January 17th. I don't think I have any exposure on LLY right now. Let me double check that though. So LLY, this is for all accounts here. I do not. So I have Lockheed Martin. LDI is Loan Depot. But yeah, I don't have any LLY any longer. That trade's good. Let me take a look at this one income-wise. We do have some earnings sitting around the 200 moving average. Let's check on the fundamentals really quickly. LLY. Earnings growing, forecast to grow, trading below estimated value, price to earnings. A little on the high side, especially for this. I mean, this company's probably not traditionally that high price to earnings wise. Fair value, though, that's pretty impressive upside. But compared to Pfizer, compared to Johnson & Johnson, compared to Merck, I mean, I would just want to do an income-based trade on Eli Lilly. I wouldn't necessarily want to be owning. I mean, at least not owning 100 shares. That's an expensive stock for 100 shares. Now, if I were to just dollar cost average, I don't mind that. But let me see here. Let's look at the mechanics. Let's look at the IV rank. And maybe I can do like a 30 to 45 day trade here. We take a quick peek. We still have 14 minutes. Price is right in the middle for 3 more winners on SPX. I like that. Let's go out. So we have dividend. We have earnings. If I went out to March 21st, that's 49 days. That's a pretty good sweet spot. Revenue. I mean, these aren't awful. If I looked at like I mean, 600 is not bad. Mechanically, 600 is, that's so low. I mean, that's like a 2 delta. Let's see. That would have been, so I took this trade. When price was falling to these lows. So I don't think I can get my like a ratio spread or 1-1-1 trade. I don't think I can get that all the way down to 600, but let's find out. if I did a 60-30, 60-20, 60-10, it's not a bad income trade, but it does tie up $6,000. It's not awesome. If I just did a ratio spread, 60-20, I get $1 for that trade. It still ties up $6,000. I think it's, I don't know. I mean, for $100 and tying up $6,000, I don't really want the stock, but I think what I'll do is I'll just look at an earnings play. Okay. In fact, let's do this. We have a lot of indecisions so far going into earnings. Earnings is going to be the 6th, which the 6th is next Thursday. So if I started trading this, I think I can price this out really quickly. So let's go to, and again, this is all, I'm actually going to be launching a course on this on February 10th, by the way. So if you'd like to stay tuned on that, then I'll post my Telegram and Discord at the end. I'll post some links to that. I'll have some webinars starting on February 10th. But LLY, average move is 10%, but I haven't seen 10% over the last 10 prints. So we've got 4, 5 and change, 9, 9, 9, 9, and 8. That's way different, right? A 5% earnings move versus a 9 to 10% earnings move. That's a big difference in price action. I think the only issue that I would have with this stock as far as the strikes for next week would be, so it would be the 7th or it would be the 14th. I'm almost wondering if I'm better off doing the 21st. Market maker's looking at about a $52 move. So market maker's going after $52. Percentages here showing around 10%. I'm going to be conservative and go after like an 8% move. Now, how many times in the last 10 prints did it at least go to 8%? That's what I want to know. How many times did it at least go to 8%? 8%, 8%, didn't get there, didn't get there, didn't get there, did get there, didn't get there. It did like day 8, but I don't like that last day. Didn't get there, didn't get there, and didn't get there. Wow. So only 3 times out of 10 did it go 8%. So realistically, that's pretty awful. I wouldn't want to trade directionally necessarily on Eli Lilly. Man, this might be a good opportunity for. I mean, nobody knows, man. Like if I looked at like a 10, you see through earnings, I go out to the 7th or the 14th. I don't know if this is going to get me anything that I want, but how far out of the way can I go? 900 plus. I mean, I have to go to like 975 or 600. 975 is way the heck up here. I'm getting nothing for that trade, by the way. And 600. I mean, these bids are just garbage. Yeah, so it's just not good enough. I was going to say, like, looking at an Iron Condor, I'm not going to strangle this thing. It's an $800 stock. That's a stupid trade. The earnings itself, I mean, one thing I could look at would be, and this is also a gutsier play. I pull in a lot of premium for this trade, but if I go to the 7th and we don't have a crazy overreaction, if I sell the 815 call and I sell the 820 put, I get $47 of premium. Market makers by next week are expecting about a $43 move. Now, I'm calculating roughly an 8% move. Okay, 8% move on an $817 stock is $65. So I don't really get enough premium on the trade to justify, even selling the premium here. So I don't know. I just, it's pretty simple. Like, I just don't like the trade enough. The other option would be if we're going out like 50, $60, I can make a cheap trade on it. The only issue though is I don't have the confirmation that in 10 earnings prints in the past that we actually go 8, 9, 10%. So I mean, I can make an inexpensive trade here, but it's 5 wide. It's going to cost me a little bit more than I want. So I'm gonna say no to Eli Lilly. So whoever asked about Eli Lilly, I obviously did a little bit of a dive. I like the fact that we have earnings. I was looking for a play, just don't have it. Just don't have it. I will say this though. Let's say that Eli Lilly pulls back. If it pulls back to 700, then that should increase volatility. The IV goes up. If we come back into this area, I would probably look at a 1-1-1 trade or a ratio spread. So I'd buy the put. So buy the put and then sell a put below that. and have a little bit more willingness to own or try to get out of the way. But I don't know. I mean, I could see this being just very indecisive, but not necessarily going higher, not necessarily going lower. But I just want to wait and see. Okay. William, I see your comment there. It's right. Look, man, I will cram in as much of my day as I can. If I'm on my butt from 8 a.m. to 4 p.m., I will fill my day up with whatever I can. So if I'm trading, it's fine by me. So I can handle the additional services. Yep, and it's earnings, and that's always I don't have to trade a ton. It's like I just want to try to find what I think has the best probabilities for good earnings trades, and probably place. I don't know, for an earnings service, I'd probably be trading like 100 to 150 times for the year. Um, and we trade some usual suspects. We'll trade some big names. I'll look at some liquidity levels as well to see if there's like a no-brainer directional play. Otherwise, it's just really sticking to the numbers. Yeah, Xavier, we talked about that. I mean, all you really saw was a bunch of noise on tariff talk today. So market sold off. It was just more confirmation that tariffs are going to begin February 1st, which is tomorrow. So Mexico, Canada are going to feel it. The market didn't like that and reacted to it. So reacted to it yesterday and reacted to it today with the reiteration that it's going to be tariffs through the weekend. And that does make for an interesting open on Sunday. Yep. All right. So we have 6 more minutes, and I should have some profits running on my SPX right here. So this trade should be worth about $20 a contract. I don't think there's a profit trap going on right now. I doubt it. Nope. So it's trading at 0. I'm just going to let it expire. And this trade right here, so a little 60-10, so 60-10 to 60-25. This one should be trading next to 0, so I'll let that one expire as well. So this is current price. That's a bear call spread that's going to finish and expire worthless, and that's what I want. I want it to close at 0. And then my final trade is right here, the 60-20 by 60-50, 61-20 by 61-50. That one's trading for probably 0 as well. Yep. So 25, 45, and 20 to wrap up the day. That's a nice little winner. So what is that? 45 and 45, so 90 cents to close out the day. I'll take that credit. Add that to the wins for the week. Not too shabby. Unfortunately, didn't get a profit trap, but that's okay. I'll take the 20 cents credit. So I'm going to go ahead and mark up the trade. So 6005, this is a buy. Put, sell 6,000, put, and a buy 59.85, put. Ah, crap. Okay, so that's going to be exit at 0, exit at 0, exit at 0. Pretty sure the last 4 minutes, nothing's going to happen here. Take the profits. Okay, not too shabby. Let's see here. Down to mid of $2 target, 3.5. Yeah, I've got this SPX trade is trading for $1.40. And I've still got the profit target set. I've got the other one set at $1.10 and it's trading at $1.08. I mean, they're still like they're fine. I mean, we took the trade on the 20. When did we take the trade, by the way? They should be fine. I think this is so the trade on the 15th. I mean, yeah, I guess mechanically we did do we did this trade where we're showing like an average hold time of like 12 to 15 days. I mean, when the call side is a little bit higher, when it goes from like a 15 delta to like a 30 delta, 35 delta, it takes a little bit more. Like the calls have to retreat. and the put side that I rolled, we're adding a little bit more volatility on the put side. So if price does sell off, I mean, it's like we're still in the right window of like time decay. But the issue is, if price wants to keep threatening these highs, like the call side is closer and it's a higher delta still. So I think over the weekend could be helpful. If we open up a little bit softer next week, that's probably very helpful because we're essentially going to return towards the center price, and that's what we want for that trade. I know, man. Well, you shouldn't have used it in the first place. I mean, you got to have some buying power remaining. I had a client today actually that ended up getting assigned on another account, and it ended up using the account that I trade for him. It ended up taking buying power away from me. So we had to get that resolved today. He was down to negative 40 grand because he was assigned on the queues. So we got that resolved, and now he's got 60K back. So I mean, I'm always trying to maintain buying power, at least to make sure. I mean, you get it, you know that. So all right, well, I'm the cheerleader too. So I'm hoping we get all the trades to work out, get the buying power back, and then I know for you personally, Papa John, you might just look to go to the daily stuff instead of going out to the 40, 50, 60 days. But I'm looking forward to look. I'm just looking forward to grinding. I mean, right now, still up about 105 grand to start out the month, which isn't too shabby. My goal this year, I don't really have any goals. It's just I want to trade to the best of my ability, and whatever the dollar amount becomes, it becomes. Usually, it's pretty good because I don't really stop trading until it's December 31st. So if I see an opportunity, I take it. The important thing for me is that I still have cash to deploy. That's the most important thing for me is that I have cash to deploy. Because if I don't, then my hands are tied. If I have cash to deploy, I can be patient. I can, allocate 40, 50, 60% of my portfolio. But if we have any, I mean, look, I think that this year we're probably going to have some excitement. I wouldn't call it excitement really, but I would just say we're going to have some noticeable things when it comes to volatility. I just wouldn't be shocked this year to see that the VIX, for example, has way more of this crap going on. I could see the VIX this year having lots and lots of spikes, right? It may not be like an outlier, right? But I could see a lot of spikes where we just have like very steady probability or very steady volatility. But as we get these spikes, there's ways to take advantage of that. As we get back down here, there's ways to take advantage of that. Obviously, watch our technicals, and we just continue to do our thing. All right, Lee says tariffs on steel, aluminum, copper, no mention of gold or oil. I mean, oil's going to be, nobody's going to put tariffs on gold. What are you going to do on gold? It's like those who accumulate the most gold, do you care about tariffs? Nobody's exchanging gold. If you mine it, you want it, but it's the spot price and it's the fact that gold is serving as a safe haven. But yeah, steel, aluminum, copper, I don't know if we're tariffing on lumber or any other energy sources, but reaction is that the market didn't like it today. So what was that news right there? What was headlines? Chats, screeners, calendars, options. Interesting. I haven't seen this before. Can I build this stuff out? That's kind of cool. Strategy builder. Can I add more legs to this? Take a look at this. Create. There we go. I don't want to create a long call though. I wonder if I can just build a custom spread. But that's at a glance, that's pretty cool. Option chain. Here we go. All right. Trade view coming in swinging with some options. Where the heck did my news go? It keeps popping up. Where the heck did my news? Where's my news feed? Somebody help me out. Where's news feed at on Trading View? Thanks, Pop. Give the market reaction. Do you think the gap down? I have no idea. I mean, it seems like the market is nervous about it, but this could be the reaction. And then depending on Sunday's open, I would say the first thing you want to look at is Sunday at 6 o'clock. Sunday at 6 p.m. Eastern time. What are futures doing? Right? If futures is falling hard, brace for ugly Monday open. That's what happened this week. Sideways, then maybe a non-event. Up, then okay. Today was noise. So I really don't know until futures start to flow around on Sunday night. If we get a wild and crazy, and again, the weekend going into Sunday, and usually this isn't a factor. It's like, traders ask me all the time, Chris, you hold trades over the weekend? Yes. If I have trades out, 30, 40, 60 days, leaps, 120, 360 days, I'm holding those trades over weekends, multiple weekends. But the short-term stuff, I mean, if the market is gapping lower, the market is gapping higher, over the weekend, this is the most vulnerable time, right? Because when the global flows start to open up on Sunday, I mean, Wall Street is waiting until 9:30 Monday morning. So you have a 13 to 14 hour window until Wall Street can actually start putting on flows. So I don't know what's going to happen next week. I mean, I wouldn't be surprised if the market's looking at this as, okay, tariffs are happening and they're being imposed. It can't necessarily be a great thing for the markets. I mean, the argument too is that large corporations will feel the pinch of tariffs on top of the consumer feeling the pinch of tariffs, on top of adding probably more frustration and I keep saying this, but like global economy friction. So I don't think the initial reaction is good, but I think the market's going to have to figure out the noise. I don't know, but I don't mind right now if price wants to have this be a top for a little bit, have this be a low for a little bit, and have price just kind of bounce back and forth with a lot of volatility. And we don't do anything crazy risky. We don't necessarily see the market going to highs. We don't see the market falling apart and collapsing. So we just exist in an environment where we can make some money because that's what the environment is, right? There might be very little about 2025 that feels like an easy market, And I'm not saying the last 6 years have been easy, but if you were bullish, anywhere in 2020 outside of the COVID crash, you made a lot of money. 2021, same thing until the market peaked out in November and then rolled into the tops in 2022. That was a 9-month bear market, but we came out of it. So 2022, 2023, end of 2022, 2023 was a bull market. 2024 is continuation higher. And now 2025 is right now. What happens? I don't know. But we're sitting up here at these 98th, 99th percentile risk on ratios, risk on percentiles. All of this is like super, super high concentrated, high valuation, unlike anything we've ever seen. And the contrarian would say the market's overvalued, be bearish, go into bonds, go into cash, go into gold. And I get it. But the contrarian also has been saying that for years and losing based on the market climbing the wall of worry. So it's hard for me to get around and go into that camp where it's like, oh yeah, I'm super bearish. Look, I'm going to throw some hedges out there, which I have. If the market falls, I have hedges on the S&P, right? If the market rallies, I'm tilted bullish to my overall portfolio. Income trades, I will keep doing like my 30, 60 day income trades, and then we'll grind day to day. It's like that's plenty of agility for the market to just trade this year and see how everything plays out, right? All right. So anyway, it's after hours. So closing bell, good. Close on those 3 trades. Very nice. I'm going to say we added 3 more wins. I put in earnings for the week, waterfall at 48 out of 52. We've had a nice little streak on daily profit play. Let's see here. From 9 to 47. So 47 to 9. I've had and there's some trades that are not complete yet, so probably about 33 trades. I've only had 2 losses in the last 33 trades. That's not bad. 31 for 33 is a pretty good streak. That's 93.9% on daily profit play. I'm liking it a lot, actually. So we'll continue to grind, and that's all you can do. All right, everybody. If you're watching on youtube.com/financial wars, kindly hit that thumbs up button and like the channel, subscribe to the channel. I will be live next week again, Monday through Friday. I don't think there's any disruption to that. Let me double check my calendar. Next week. Yep. So I have next week, 3 p.m. Monday through Friday. A couple extra webinars scheduled and sprinkled in there. Should be business as usual next week. All right, I'll let you go. Kindly hit the thumbs up button for support the channel and the content. It's all free, so there to help. And have a great Friday, great weekend. I'll see you soon. Okay, thanks.